Hi folks, this is Sean Hyman from Chart of the Day. Many of you may know me from WorldCurrencyWatch.com, and I also run the Currency Cross Trader service. Focuses in on currency crosses that are pairs that do not have the US dollar in them. Gives you a lot of diversification and some really nice trends. Encourage you to check us out at WorldCurrencyWatch.com and check out the service that'll give you exact trading recommendations with exact entries, stops, take profit levels, even the number of lots you should use per X amount of thousand in your account. Now, on to today's lesson. What I want to talk to you about is the first thing that you should look at when you are doing your charting. The very first thing, and the very first thing is not these indicators down here below the chart. Your eyes will be drawn to these, and putting on too many indicators scrunches up and pushes your price action too low. What I would encourage you to do is have one or two simple moving averages on there, also called SMAs. Usually a 50 and a 200 period simple moving average, or at least one of those two, and have it on the daily chart. And I want to show you the first step, what happens when you start taking some of these indicators off. Let me pull both of these off. Here we go. Notice how much bigger the price action got. Notice how the steepness of the angles shows us the trend so much more distinctly. When I had all that scrunched up there, this uptrend was not as distinct and this downtrend was not as distinct. The angles of the moving averages weren't as distinct either. For instance, here on the euro-dollar daily chart, this is a distinct downtrend. I mean, look at this, the how steep this angle is. I could look at this from across the room. I could get up from my computer, walk about 10 feet or so across the room, turn around, and I could tell you what this trend was doing, even from across the room, because of the steepness of this angle. So this is a medium-term downtrend here. Also, the long-term trend is turning down some as well. So I look for shorting opportunities and not any buying opportunities at all whatsoever. Bar none. Then there's some that are not quite as clear, like this is kind of sideways to maybe up a little bit, but this long-term one is still down. So when you're new to trading, I would skip that one. What you want to do is look for the clearest trends. Look at this medium-term downtrend. When the 50 SMA crosses below the 200 period SMA, a lot of people in the industry call that the death cross. And the reason is because it looks like the pair is going to die. I mean, the near-term trend has gone below the long-term moving average, and I mean, it just starts usually dropping like a rock. Now, when that happens, does that mean there's not going to be any up days and that every move, every tick, every day will be down? Absolutely not. See these blue candles? Those are definitely some up days in there, but look at how much red there is versus how much blue. Look at how long the red candles are versus the average blue candle as well. So that's why you want to be on the short side of the market and not the long side of the market in a distinct downtrend. So you have the long term turning down, the medium term turning down, and the price action below these. It's a clean trend there on pound dollar. Here you have a bullish cross, and you also had one of these death crosses as well. This crossed over, and again, it doesn't mean that this can't run up and retrace while it's even having this death cross. It just means that overall, over the upcoming days, weeks, and months, this thing's likely to be downward, and that's exactly what we got here. And then here you've got the near-term moving average coming up above the long-term moving average. The long-term one kind of planing out a bit, and the price, at least presently, staying above the both moving averages. So it's a bullish sign overall. Again, it doesn't mean it can't pull back some in the near term, but long term it'll likely be up. I want to show you a very clean one. And again, this is what I do. When I'm in my Currency Cross Trader service, I look for the strongest trends because I pair the strongest versus weakest pairs, and I do it actually with the currency crosses, which produce even steeper, better trends. But look how clean this downtrend is. I mean, I can clearly see that this price action to the left of the chart is distinctly high, and over to the far right of the chart is distinctly much lower than that. I could step across the room and see that. I could see that this long-term moving average is pointed down. I could see that this medium-term average is pointing down. That the medium-term average is below the longer-term average, and that the price action is even below that. I mean, this is about as clear of a downtrend as it gets. And so what you want to do is, once you have your trend determined, you say in your mind, okay, the trend is down. Therefore, I will look for sell short signals only on smaller time frames. Now, so I could just for simplicity, I could take all these indicators off of here and just go with one indicator. I like the slow stochastics. I like the 1433 settings, so that's what I'm going to put on here. It's kind of a it doesn't give you quite as many signals, but the signals you do get tend to be more accurate. And then when you do get those signals in conjunction with the trend, they're very accurate. So since I'm looking for sell short signals, I only look for sell signals, and I do not focus on buy signals at all for entries. So I could sell short here, I could sell short here, I could sell short on any of these, I could sell short on any of these. If I wanted more action, more trades, more number of trades, but fewer pips to be gained per trade, I can go to the hourly chart, and you'll see a number of sell signals up here. My gosh, there must be probably 10 to 20 sell signals on this hourly 30-day chart. And so, you can zoom in on this thing and take this sell short signal here, take this sell short signal here, etc. Now again, keep in mind too that just because you get a sell short signal doesn't mean that it can't continue to retrace on before it dives again. Many times it will do like this, like when you get this signal, it will be at the end of a retrace and start diving from that point. But you want to have some depth to your stops. Use fewer number of lots and wider stops, and you're likely to come out very good in these signals because they become very high probability. If you just take any and every signal that comes along, buy and sell signal equally, you're probably going to have a very rough time. So look at the trend direction first. Have only the moving averages on your chart, either a 50 SMA or a 200 SMA or both. Judge the trend first on the daily chart. Then with that daily trend in mind, keep that in the back of your head. Say I'm only looking for shorts, or I'm only looking for buys if the trend were to be up. And then go to your smaller time frame, a 1 hour or 4 hour chart, and put one indicator on that chart, like I did here with slow stochastics. You could choose MACD, you could choose RSI, whatever, I don't care. But put your one indicator on there. It keeps your price action big. You can see what's going on in the chart because that's the most important thing. And then also you'll be able to read and see your indicators most accurately and the moves that they're making as well. Hey, I hope you learned something today. I appreciate you watching. Thanks so much. Bye-bye.